Hi everyone, Laura Montalbano and Gil Dameron with Cannon Realty here at the Cannon Realty building. We're here to educate you today about a topic that a lot of people are curious about, but they're confused, and so a lot of times they just don't even pay attention to it. And that topic is taxes. What does it mean for you as a homeowner, and what can you expect, and kind of a breakdown of how they come about it. So, Gil, I'm going to refer to you on this. You've had 30 years trying to explain all this to people. I'm going to let you do that. So let's start with we're talking about the homeowner's taxes and what it is like as a homeowner when you get a tax bill from the county, what that represents, and how that's different than the value of your home when you put it on the market for sale.
Hmm. Well, it's a topic that some people get into because when they buy a home, they're seeing the taxes and they're seeing a monthly escrow going to their loan. Or if they're selling a home, they're looking and they're saying, my taxes are $1,700. I have no idea why they're that, but my neighbor's is only $1,500. What gives? But there's reasons for that. But basically, your taxes are figured on your fair market value, which is a conservative value, and then they're figured on a percentage of that value.
And that's typically less. You're going to see a lower rate.
Yes.
That value
Yes.
is not the same price that you would list your
No.
home for sale.
It's a way they have to adjust the difference between homes and farmland and commercial, basically. So
Okay.
what they do is they take, let's just say, $100,000 home that's worth 150. The $100,000 fair market value, you're not going to say, well, that's too high. You're not going to say, I've never had anybody come in and say, well, my taxes aren't enough. We want to pay more. But what they're going to say is, okay, that's my fair market. Okay, 19% of that is 19,000. Now you look at your school system and all your little bills that add up, which we need them all. Schools, hospital, roads are all on here.
Right.
And so that adds about $4, $4.50, $100.
Yeah, so actually
simple math.
they're going to get the real estate tax bill from the real estate or from the tax collector. And if you have a mortgage that has an escrow account, that bill is going to go to your mortgage company for them to pay this
They're going to pay it out of
portion.
your escrow.
But you're still going to get a personal property tax, which is something that you're going to have to pay on your own.
Yes,
Okay.
yes, on your cards and things like that.
Right. So those are two different things.
Yeah, they're two different things. I'm glad you brought that up. Two different things. Your real estate will be on one bill, your vehicle's on another. But you're all going to pay a tax to the different entities, the schools and
The schools and the
the
state and the
hospitals and the
hospitals,
roads.
right, which is all important.
But the per hundred is so important. People don't understand the per hundred. So if I got 19,000 at the assessed value, that's after I deduct from the fair market value and take the percentage they give me. Then I've got $4 times 190 100s, which would be 800.
Is Gil the teacher today?
Yes,
Gil is our teacher.
and you're the. This is
Student.
Linda, our bookkeeper. She ratifies everything I say.
Yep. Good night, Linda.
So your bill is $800 roughly, because that's the way it figures. The schools in the roads and all are $4 per hundred. They got to have their taxes to keep the county going, and that's where they come up with. If your house is $200,000, it's going to be about $1,600. I mean, and you can figure if it's fair or not very easily. Just add up your assessed value and your per hundred.
And you
You're
can
gonna pay-
always go to the tax collector's office and talk to them about how they're getting that rate
Yeah.
and make sure that it's accurate for you. Another thing, another issue with taxes is people look at the taxes whenever they're closing on a home. They're at the title company, you still have that annual amount of taxes that got to be paid on that property. But let's say you own a property from January to June and you're closing June 1st. So the title company's responsibility is to make sure that they collect enough money from January to June for the taxes for that year and from the seller, and then they also collect from June to December from the buyer so that they have that money at the bank prepared for the next year's taxes.
They have reserves, so they got plenty of money to pay the bills. In the old days, you did the honor system, you just paid it yourself and get a paid receipt, but people, the banks like it better, and most people do too, to escrow it and know the money's there to be paid. The,
Oh, Well, if we haven't confused you.
Yeah, and I'm sorry. This is not a unboring topic, but it's something that has to be said because a lot of people, when we go out and list their home, they want to know. The first thing they might ask us is, what are these taxes and how come mine's so high? When we got a buyer buying a home, the first thing they might ask us is, the taxes out here are cheaper than St. Charles, but they're still kind of high. So we got to understand how this works. So
Right.
that's what is important for us to know how to explain that. And if you got any questions, you can call.
Call us. You can call me on my cell phone at 636-290-3204. And Gil, what's your cell phone?
636-358-6889.
And we're here for text. You can always text us on those numbers. You can stop in at the office here at Cannon Realty, 193 North Lincoln Drive, or give us a call at 636-462-5400. And guys, this is a seller's market. We have qualified, pre-screened buyers waiting for properties. Let us help you. We're here. Let's see what your possibilities are. We'll give you a free consultation, won't we, Gil? You're not going to charge them, are you?
I'm not going to charge them.
All right, well, come on and see us, and we'll see what we can do for you.
Yeah.
That's it for now. Thanks for joining us, and we hope you enjoyed this. Have a good night.